today's, again, positive finish at least points us in the upward direction for now.
Hi, once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Thanks for joining us. As always, make sure you like these videos, subscribe to them by clicking on that bell icon down below, and share them with others as well. Well, today, my very special guest happens to be Joe Camp of Comstock Investments. We're going to take a look at the markets here on a Wednesday. Lots of stuff up in the air, and people are very confused about what to expect from things like China, from Hurricane Milton, from the economy, from South American weather. Joe, a lot of stuff going on, and we have been dealing with chart target points here for the last few days. Explain what's going on from your perspective.
You covered a bunch of it, but of course there is a bunch more. Just these items that won't stop coming at us. And we thought this might be the case heading into this month with all that's going on overseas. For one, we're tracking those dynamics, Israel's war on terrorism. Some talk here this afternoon about intentions to retaliate against Iran for recent missile attacks. You have that fighting, no end in sight, unfortunately. Oil rebounding a bit after that news, down early, though, because of weakness on China worries. That's a big theme this week. China. We came in, they were off of their Golden Week holiday. Not much follow-up from the government on stimulus. Then some half-hearted measures here or there over the last 24 hours. Maybe more to come. You've got the U.S. stock market rallying and helping create a better environment overall for commodities. And then you get to these grains, and all of that's important and kind of takes away what is otherwise normally this focus that has to be talking about yields and what we're hearing from farmers and just the dynamics of the harvest market. And it's partly that, but again, so much more.
Want more? Sign up today for our premium content. You'll receive our reports twice a day, plus every morning, an in-depth market analysis with Eric Relf. Every afternoon, you'll receive our daily podcast with Marlin Bohling. The first month is only $1.
You know, I thought it was a little bit unusual that we had big gains in the Dow, for example, and also big gains in the dollar, while the crude oil was lower. The Dow and the dollar don't always go the same direction like that.
No, and that's a continued back and forth of uncertainty about what to expect out of the Federal Reserve and their plan for interest rates going forward. That coincides with this afternoon's release of the minutes from our most recent Federal Reserve Open Market Committee meeting, where they dropped the interest rate by a half a point. Predictions now formulating and shifting about what to anticipate for November, our next rate decision. And mind you, again, that's the same week as the election. Actually, just 2 days after November 5th, we'll have our decision from the Fed. And again, a day after that will be our November crop report. We'll have an October one of those before that on Friday. But you've just got all of those moving parts there with the economy. And at the same time, the safe haven play and the spike in drama in the Middle East, or in the ongoing war in Ukraine with Russia, or you name it, there's been a lot of flight to quality to the dollar, even after that last interest rate reduction, and also some backing off of our outlook for the Fed and their dovishness. Lately backtracking and thinking maybe they're not going to be quite so accommodative, especially after that recent friendly jobs report. But all of that shaping up, like you mentioned, the big rebound for the stock market, but still some continued rebound strength as of late for that dollar. We got to keep an eye on it.
While the Dow was soaring higher today, I heard the Chinese stock market came out of a holiday, and it really fell on its face after they had passed that stimulus package a while back. Seems like it didn't get any traction after all out of that, and that's making people nervous.
There was a hope that there would be follow through on additional stimulus measures when they came back from that Golden Week holiday, and did not come immediately with big bazooka plans, pumping money to consumers, shoring up the banks in a bigger way, and addressing what is continued increasing concern about their economy. You did have, though, a rebound take place early on the Tuesday session for China, and then some back and forth here heading into the rest of the week, I would expect, as the news has the Chinese government releasing some measures and then still potentially having more that could be announced in the coming several days. So it was a disappointment that could flip towards less of one or even a more bullish one, like that initial round that you mentioned of stimulus was treated. That really rallied the market, and not only was a factor for the big outside financial markets of interest rates and currencies and the stocks, but of course the commodities and our grains that China is a big customer of course.
Now, the next WASDE report is coming out the end of this week, I believe. So I just wondered how much trade was kind of governed by positioning ahead of that report when it comes out.
I would say for now, very little positioning and anticipation of this report because of all else that's occurring in this trade. With the news just mentioned, the technical factors at play, a lot of overall focus on the harvest, but not any more certainty, I would say, overall about having a handle on this crop, except to say generally, as the average trade guesses would suggest, there's the thought that we could see incremental reductions on the corn and soybean yields from here. And that would just be a simple product of the weather from our last update last month, stressful in many places, and some of the early results from the South potentially knocking down those averages. Still record highs across the country, but those consensus measures looking for the corn yield down to say 183 even would be 0.3 of a bushel down, and the soybean yield just a couple of tenths as well lower. That is important though for the balance sheet. If you go back to corn, especially, even a minor reduction to the yield could be enough to send that new crop carryout estimate below 2 billion bushels again.
Well, maybe some of our viewers don't know, but you are actually personally located right in the middle of the Corn Belt. Maybe you can remind everybody what part of the country you are in and how the harvest is going in your back neighborhood there.
Yeah, I'm in central Illinois, so we've got customers in my area as well as family, and that's how part of the weekend was spent. My 2-year-old son got to ride in the combine with my father-in-law and harvest some soybeans, and by all accounts, they were pleased with the outcome, and there are very good numbers being thrown out there. But to not speak for the whole state, I hear reports too of some disappointment and just widely variable type yield ranges that, though, again, include very high top end yields. So one example, I'm giving to customers would be talking about yields observed in Champaign County or around the U of I, a notable part of our state, coming in with some whole field soybean averages in the 80s, very outstanding type of year for many. Others, it was wet early on and hot and dry late, like so many other states across the country. So we're going to have record yields likely in the state of Illinois, both corn and soybeans, but our state can be like the national average as well, where we can see two things true: record averages, but not quite as high as the USDA had on its last print. So that's coming into play as we head into the rest of this week and look forward to the crop report. And then as we continue to talk with farmers around us, and as I get out and see what's going on, really important, it's a long state, south to north, and the southern harvest has certainly been mostly whipped like it would be across a lot of the country. But then you advance forward, and it's going to be this week that's so hot and heavy for a lot of the top half of Illinois, and that would include, of course, on into Iowa and a lot of the rest of the Corn Belt. We talked with other customers, Indiana, similar type outcomes for Illinois in many places, although further south and east, you start to develop that stress and the impact from drier conditions late. The same with Ohio. It's all over the place in the West as well. So that's really the takeaway from talking with farmers, whether it's here at home or across our customer footprint. that there's some very good numbers out there, but it's also very variable.
Now, I am located in Tennessee, northern Tennessee, and here I would say the corn is basically all gone. It's all taken out already. Now they're actively working on soybeans. So it was fascinating to me how fast the corn matured and was harvested out there. In your part of the country, how is the harvest going? Are they doing corn first, soybeans first, or are they just kind of keeping even?
It seems as though we've poked into the soybeans quicker, and that would be maybe an increasing trend in recent years. It might fit with planting dates. Certainly, varieties come into play, but the soybean harvest has advanced slightly faster, and that would be kind of the theme. Barring a lot of the South and the Mid South, like you mentioned, that would be more corn first and then soybeans. You're going to have a lot of farmers express this year that the soybean crop really felt like it was rushed to maturity. We've got really dry moisture content in a lot of areas, and it was the opposite of that, particularly, of course, in that huge stretch of the Western Corn Belt that was wet early on and suffered from late planting. Well, you can see that in a later coming corn crop that's now just getting going in a lot of places across the Midwest, when the soybeans, in many cases, again, nationally, we're above 50%.
And I'm glad you brought that up, because tomorrow I will be doing a program dealing with the fire threat, actually, in the western part of the Corn Belt that you mentioned. Lots of wildfires, and we're not talking in forest ground. We're talking about crop ground all over out there in the central and northern plains. So we'll be talking about that. That has to be a little bit concerning too. Obviously, that's a sign that maybe crops had to mature a little faster than they wanted to.
And that's just, of course, one extreme of many that would add to those faced all year long. And that's what we have to bring up, even when we talk about record national averages and record individual averages that you have to have. There are those that suffered from these extreme weather events, from the start of the season. And if they did have the crop planted, whether it was flooded out in the west or torn through derechos in the south, hail, this was one of the most active in modern history seasons for hail. So you have all of these extreme weather events come into play, and then a reminder that they're not necessarily finished. And that can be true if we talk about wildfire risk, and that being caused by the drought expanding and the outlook for weather that would support that. And then, of course, what we know is going on in the Southeast and the hurricane threat for what crop might not have been harvested yet down in those regions, not to mention focus on crops and the impact for logistics and blah, 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 more focus on, the impact on human life and the threat there. So it's something to bring up, and unfortunately not something you can do a lot about in many cases.
Not a bad finish in soybeans and wheat today. Soybeans, my goodness, they started their rally, it looks like, in mid-August. And it went until, well, about the 1st of October. Then it kind of fell out of bed. So it took a while to build the gains in there. And now it looks like we have hit almost exactly a 50% retracement. And then today it seemed like it wanted to bounce off of that. How critical is it that it hold that particular support line?
Yep, it was about $1, a little bit more's worth of a rebound from low to high, that mid-August low up until recently. As mentioned, about 50%, down about 50 cents here after the latest turn down. And you have some support now as you close back in on key levels like $10 even for the board. That's critical. Same thing for corn futures, and taking a correction after a really healthy run up. One thing we're watching just simply on the charts would be the broader definition of the uptrend that we've been in since having those mid-August lows, and so watching averages like the 20-day and how that would split the recent trend. So it did fit with everything kind of leaning negative news-wise this morning, that ultimately we did have the pressure that we observed, yet now that we've corrected and had a bit of a pause after one of the busiest stretches of harvest that we'll have all year, to see the beans and the wheat close firmer, like mentioned, and the corn not to really fall out much more than it did, that's, I think, a positive sign.
On the corn, it looks like they tried to test and take out the 100-day moving average. Just barely got above it a little bit, and then it's like it repelled it, and it has come down since. Does that look like maybe it has put in a temporary top on corn?
Certainly, the action has suggested that. You've seen the divergence in the momentum and the slowdown. I still question whether or not the bulk of the latest selling has been more commercially driven from those hedgers that are matching sales made by the farmers, again, over this busy stretch of harvest that we've had. And if it will be the case now on the latest break, that you'll have a re-engagement of those speculative traders that have recently cut their net short positions to basically their smallest levels of the year. In corn, that was brought up that the last trader commitment report did show the position at its smallest level since August of 2023. And if you look back at modern history, you don't see many times actually when the funds have historically had a big net short position and covered it and then went right back to being a big bear. We had that in part earlier this summer, but most instances is if we get to this point, they're going to turn at least net long for some period to try to take advantage of the momentum. But again, that's the fear lately, technically, is all of a sudden we're losing that. It would seem to me a lot riding now on the fundamental injection of either positive or negative following Friday's crop report.
Just like the corn, the wheat market is also testing the 100-day moving average right now. So it appears to be decision time on wheat.
It is decision time, and that would hold true for a lot of markets. The U.S. having lately been back to following the Russian and French wheat markets with the bounce back with the French exchange noted this morning. That was a driver, something that allowed the easing of negativity that we observed early on. And so wheat can be a leader if it holds up here. And, that could be true, though, for the other direction as well. It can be a leader lower, as we've observed oftentimes. Today's, again, positive finish at least points us in the upward direction for now.
Now, on the livestock side, if you look at live cattle, let's see, what do I have? I've got the October contract I'm looking at, and it's reaching right back up there to the recent highs that go back to the end of July, the way it looks. And there it sits. Now, it had kind of a day of back in filling today, but boy, it just looks really overbought on the charts. How much at risk is that market right now on cattle?
It would seem to be at risk from a correction type of standpoint because of the run that the futures have had. You're seeing also different points of big resistance develop, like the summer highs being real key. Most of the live cattle contracts right up there, and that would put them then also not far from their all-time highs marked back in September of last year. In all cases, you look at live cattle futures roughly 5% or less from their all-time high. That's why we wonder if that's a point where we're going to see some pausing here, some notice taken by the short hedgers, by the producers, like we're talking to. And technically, you've got the market a little bit short of other measures like gap on the chart for October that still exists up just above 190. That 190 level itself being psychologically critical just above the market. So we have to transition, from the grains talking the charts into the cattle, because that was very much what we had to look at on today's session, a technically driven trade. You mentioned the October, which I want to watch while it's still the nearby always, but the December contract would paint an even more bearish picture just short term today because of the bearish outside day down that it had. So it will be an interesting follow up on this down day to watch the rest of this week.
I think last time we spoke, you commented about the spread between the futures on the cattle and the cash market. Has that come together now?
We have seen convergence as of late for particularly these live cattle contracts, talking about October above 188. December just above 187. A lot of that trade in the South anchored around 186. Hopes we could see some advancement, 187 or 188 this week. But again, that would match about where we're trading currently on live futures. And there's not much premium out to those deferred contracts, which is also something to consider. We'll watch the cash trade as it develops. There may be, again, reason to expect we could have that advancement of $1 or $2, because just watch how this boxed beef market is acting, just briefly poking below $300 for the choice average, and everybody wondering what that might mean, and yet firmly back above it, and dovetailing to, I guess, how we started the conversation, which is that for all of the fear about the economy, stock market's still rallying. And so, that's out of the way, at least for now, as a headwind for the cattle.
The feeders, they seem to be taking their cue from corn and wheat. They're right up there at that 100-day moving average.
Yeah, and we can see that sensitivity again, maybe more as of late on the corn and the action there. Same as live cattle, though, a pretty sizable recovery from their recent lows, but not as much insofar as the live cattle we just mentioned, right up against their summer highs. It'd still be a ways before feeders could get to highs that were recorded just before the live cattle earlier in the spring. Instead, though, one positive focus, or even a point of caution, depending on how you're looking at the market and participating, you have the recovery now putting feeder cattle futures back to or above where they were before the big break in August, when the stock market really sold off, and then the follow-up when there was some political targeting of the meat industry discussed. So big recovery, and now maybe a little bit of pushback, and also a lot of conversations therefore we've got to have with our producers.
Do you really think the lean hogs are going to test that April high?
There's caution because we're heading into the fourth quarter with expectation that production is going to swell. But I think, like the cattle, as long as we're still going to have the speculators with their foot on the pedal, the buy side pedal, which they have been again for cattle and have been again for the hogs, then we got to think these trends are still friendly, and the futures are heading up towards, like, again, cattle, tests of these recent highs. So still achievable in my mind on the hogs.
It just seems like at this point, after all the gains we've had, maybe the risk-reward ratio is starting to maybe favor a little more risk to the downside. What do you think?
Good discussion to have. Everybody's different on risk rewards, certainly. But I think that's important to bring up, because I can talk about it both ways. I have to start that way when we have conversations with customers, that it can be, again, a couple of things true, that the market can keep going a little bit higher, but it can also be true that we feel like possibly we're in a range where we need to be protective, we need to be defensive, we need to be taking advantage of the strength that we have had over the last roughly month. So that's I guess the hedge on the answer, but that's the right thing as we're talking with customers to bring up.
Excellent stuff. Thanks, Joe, for joining us today. Always a treat to get to visit with you. Appreciate that. Joe Camp with Comstock Investments. That'll do it for this episode. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.